Hi everyone, it's Gail with Traders Help Desk. I wanted to go over today a trade that I did yesterday on the NASDAQ, and I was using a combination of the THD indicators with the LogikVolumeWand. And as you can see on the screen, I actually went short here as it touched the ATR, and I exited when it came down here and touched the congestion dots. Now, that was my original profit target, so that's the reason I went ahead and exited down there. Actually, if I had just read the volume, could have stayed with it a little longer, but I had an appointment, so I didn't get to. But I want to go over the way the trade's set up and the differences between the LogikVolumeWand and the THD directional indicator in NinjaTrader. Now these two tools, the LogikVolumeWand is only available for NinjaTrader as far as I know. Anthony with Pure Logic designed it. And the directional volume for NinjaTrader actually shows you limit orders as well as market orders. So what I want to do is show you both of them and it kind of explain why I want to use both of them in my trading. So this is the LogikVolumeWand, and I've set it to the first hour of the morning. And what I want to do is just kind of watch and see what happens as the morning unfolds in the market. And you can see that there was definitely pressure on the selling side. So I kind of figured I would be going short. That also coincided with the THD indicators. And the reason that it did was the 45 minute, and I always teach all of my students to read higher time frames, was right at the ATR. And as this approached the ATR, we could see that sellers started taking control of the bars. So it kind of made sense to me that the market would have a downward feel to it, and it did. And I ended up going short on this bar because, as you can see, the buyers did try to come in, but number one, the limit orders were decreasing because the bars were getting smaller, and the market orders were being controlled by the sellers. And I know that because this little mark here on the volume bar actually told me, okay, this is where sellers are stepping into the market. Now that coincided with being at the value area high, which is marked in blue here. And I've got several lines marked on my chart. So let me go through them real quick. You have the value area low, the point of control, and the blue line is the value area high. Now this bright, it's not bright red, but it's a red line up here, is a ATR from the 45-minute chart. Then we have a darker red right here. This is an ATR from the 12-minute chart. Now, if you've been watching earlier in the morning like I was, you can see it went up there and tagged that 45-minute ATR. So I knew it was at an ATR on the 45-minute chart. So as this pulled back to this ATR, the volume one showed, hey, sellers are really in this market. There's 52, almost 53% more sellers than buyers. So I knew that we definitely had a feel to the downside. You also see that the volume up here, as it's touching these highs, is getting weaker, which was good for me. So I went ahead and entered this short position with the intention of taking profits when it reached the congestion dots. So I ended up exiting on this bar. It continued down maybe another 10 points, and then it reversed when we get these magenta dots here, or magenta peaks. So you can see that not only did it go above the value area high and touch the ATR here, but then it came back to test that same area over here. So if you missed this opportunity, then of course you could get this opportunity over here. Then the way it played out is it went on down. From my exit point, I think it went down maybe another 10 points. Then we get the magenta peaks. You also had a magenta peak over on the 12-minute. As you can see, it did retrace back to the ATR in the value area high. Again, gave you nice divergence on the directional volume indicator, and of course it went down from there for the rest of the day. You did get another entry point. This entry point in this one, although you could have entered, they were high risk areas. So you did have another low risk area over in here that you could have taken another trade. Now, what's the difference between the volume wand and the directional volume indicator? There's a lot of differences, but I'm going to tell you the main difference. The volume profile is monitoring the volume over a time period for me. So in this case, it's measuring the volume in a 63-minute period, which is the market opening. Now, I can have that where it progresses. As the day progresses, it continues to monitor, but I wanted to show you just on the first hour what you would have seen. So if I take and I stretch this out, then you can see as the day progressed, it just got stronger to the downside as far as sellers coming into the area. So you can see that the volume profile, you can actually monitor any time period. All you have to do is take and stretch the bar. You can do it for throughout the day or just the first hour of the market like I did. So this is the first hour of the market. That's what I was interested in. And this is monitoring the volume that's coming in at all the different levels. It's also showing you the ratio and the percentages between buyers and between sellers. The THD directional volume indicator is actually giving you a bar by bar analysis. So this one I have to do a lot more reading on, but it does give me nice entry points into these downtrends or into an uptrend. Now let's go look at gold, because gold did almost identical to this. So this is the first hour of the market opening. You can see that there's definitely a downward push to the market. You can see that there's 65% more sellers than buyers. This happened to coincide with a magenta peak on the 45-minute chart, and your entry point on this one was actually either of these two spots where you had diverging buying volume. You knew that buyers were not interested in taking this market up. Coincided with the value area high, also coincided with the ATR. These are typically very, very good trades. And of course, then it went down from there. This is actually the ATR from the 45-minute chart. You can see that it barely tagged that area, and then it started upward movement again. Now we do have the ATR from the 12-minute here. You can see that it pulled back to it, went back and touched the value area low, and then it was more or less all over. Once it came back to the 45-minute ATR, of course from there it went up. Now we could have also looked at the volume profile for throughout the day by simply clicking and dragging. Now, if you're on the live edge of the market, it will do this automatically. Anthony has added inputs that allow you to continue monitoring the volume profile for throughout the day. You can see as it made this low, there was 68% more sellers than buyers. Now, I knew that when it made this low, this was at an ATR, so I was expecting to see whether there was diverging volume. Bar by bar analysis did show that. So you could see very clearly that there was divergence on the bar by bar analysis. If you were looking at the volume profile, you could see that the volume was getting light in that area. Again, that's another type of diverging situation. To me, it is easier for me to pick up on the directional volume indicator instead of the volume profile. I think that's more of a personal preference as to which one you can pick it up on. Now, most of you know I love to trade crude, and it actually kept me out of crude yesterday because you can see there's no direction here. It's about 50-50 on both of these, most of the volume being here at the mid-range, which is point of control. It's 98.64. This coincided with a magenta peak. We're expecting it to pull back to here. There's just not enough profit there for me to try to go into that market and try to trade that. So luckily it kept me out of crude, which was a good thing, but it did give me really nice trades on both gold and the NASDAQ. So it's just another tool in our arsenal that allows us to identify which way the market's going to go and which way our trades need to go.